Today we are going to take a look at support and resistance lines and how you can trade with them. So the easiest way to identify support and resistance is once the market moves to the side, which means we have here a sideways movement, and here are some examples. So here is the Euro USD, and here we can see the same pattern. The market moves up and down and comes always back to the previous levels. The same thing happens with every other market, so you can use support and resistance on Forex, crypto, stocks, it doesn't matter. Here is an example. Here we can see the Bitcoin market, and here again a sideways market. And we have here this similar pattern where the market moves up and down and always comes back to the previous level. So what does that mean for us? Basically, we want to buy at the support levels and we want to sell at the resistance levels, and therefore we need to identify the support and resistance levels. Now keep in mind, the support and resistance level is never a straight line, so it is never a pinpointed level, it's always an area or a zone. Now when we draw our support and resistance lines, we never want to draw a straight line but rather an area, which would look here at the Bitcoin market something like this. And what we want to do is catch as many possible points there are, meaning if I would take now here the highest point and draw my resistance line right here, I would only have one point, which would be this one. That's not what we want, and therefore we want to go a little bit lower and look at the points where we had the most touches, which would be here, 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 and here. And the same with the support area. So for those of you who don't know which is which, I'm going to write it just quickly down. The lower point here is the support area, and the upper area is the resistance area or zone. It doesn't matter how you call it. So what happens at the support and resistance area is quite simple. We have the market moving to the support levels, and suddenly here we have a price. In this case it is roughly 29,000, and people suddenly so what happens at the support and resistance areas is quite simple. The market reaches a simple area and suddenly some people think the price here is good, so they start buying and the market goes up. Other people come again and think here is a good price to short the market, to sell, so the market goes back to the previous area, which is here. And now some people might have missed the first opportunity to buy, so once the market returns they be like, now is another opportunity to buy at the same levels, so they buy once again, or new buyers who didn't have the chance come in and buy at these levels again. So this happens a couple of times here. Now there is one way of trading support and resistance, which people also call supply and demand, which would be just simply to buy here at the support level and target the previous area of resistance, which would be here, here and here, or at the same time sell at the resistance levels and here target the previous support level. Now another way would be here, after we have a support and resistance area, to wait for a breakout and a retest and then short the market, which would be another way to trade support and resistance areas. Just keep in mind there is also false breakouts, which is why a lot of people use money, especially when they don't know how to trade. Now keep in mind that the support and resistance areas can be considered like a wall, which means the more often you hit it, the likelier it is that one of these areas will break. Which simply means after we hit one specific area a couple of times, keep in mind the trend won't go on forever. At some point we will break a specific level, and here we see a break to the downside. So here we had the breakout, first touch, second touch, third touch, and the fourth touch was a breakout. It doesn't always happen at the fourth touch. Just keep in mind after a specific time it will break either to the upside or the downside. There is another kind of support and resistance line which is called the gap. Here in front of me is now the Tesla market, and here is an example of a gap, which basically means, as the word suggests, the market jumps either to the upside or downside, and suddenly we can see a hole, a gap in between the previous and the next candlestick. And what the market does is often it comes back to the area where the gap initially started to come back for a retest, meaning here we saw this gap, market went to the upside and came all the way down to fill this gap, so to speak, meaning to retest this gap and to see whether this area here can hold. Now these gaps happen especially in the stock market, and on the lower time frames we can see most of the times once the market starts, depending on your location, but here in this case this was the overnight gap. You can see the market suddenly jumps out of nowhere and starts from a higher point, and here the market comes back to retest this area, and then either it will act as a support and we can go to the upside, or we will break and continue to the downside. So these kind of gaps you can find basically every day, especially a lot of times once the market opens. Here is another example. Again, this is the Tesla market, which happened a couple of days ago. Here a gap, and the next day the market started lower, came back here for the retest right at the area of the gap and went lower. Another form of support and resistance lines are moving averages. So if we go here to the indicators and suddenly add some EMAs, in this case it would be the exponential moving average. You can take this one or this one, it doesn't matter. We can see here is a support line, and right at the support line we can see the moving average basically moving at the same way right here. Suddenly the market breaks this structure and we see here the moving average coming along, following to the next support area, which would be around here, and here the stock market crosses the moving average and then comes back, and here we form another support area, which is here again, where the moving average suddenly sees a sideways move and here crosses to the upside. So as the name suggests, the moving average goes along with support and resistance line and adapts to the different levels of the price. This is why it's called moving average. So basically this was today's video, and as mentioned last time, I will try to make more videos in future, and see you next time.